The ATO can ignore your company and tax you personally. Here is why. A contractor sets up a company, invoices his only client through it for a year, and pays himself a modest wage, while the rest sits in the business at 25% company tax rate. 18 months later, the ATO reassesses every dollar as his personal income, taxed at his top marginal rate, and hits him with a PAYG bill on top. Hi, I am Jindal. Over the years, I have worked with hundreds of contractors and consultants, and the same costly tax mistakes keep coming up. Understanding exactly how it happens is the best way to avoid it. So let me walk you through it step by step. Let's call him Harry, who is an IT consultant. He used to invoice as a sole trader. Then a friend told him that setting up a company would save him fortune in taxes. So he does exactly that, sets up what is known as a personal services entity and starts invoicing his one long-term client through a company, $180,000 a year. He pays himself a wage of $70,000 and leaves the remaining $110,000 sitting in the company, taxed at 25% company tax rate instead of his personal 37% marginal rate. On paper, that's a saving of over $13,000 a year. Same work, same laptop, same desk at the client's office 3 days a week, and just a different name on the invoice. Here is what he doesn't realize. The tax law doesn't care which entity raised the invoice. It cares who actually earned the money. There is a specific set of rules for this called personal services income. These rules look straight through the company and ask one key question. Was this $180,000 mainly a reward for one individual personal effort, skill, or expertise? If more than 50% of the contract value is for your labor, knowledge, or know-how rather than selling goods or supplying expensive equipment or running a genuine business structure, then the income is classed as PSI. And it can only belong to the individual who did the work, no matter which entity received the payment. That $110,000 sitting in the company at a lower tax rate, that's exactly where the problem starts. Under Section 86-15 of the Income Tax Assessment Act 1997, if the personal services entity cannot prove it is operating as a genuine personal services business or PSP, the net PSI is attributed straight back to the individual personally. It is taxed in the year it was earned at the individual marginal tax rate, not the company rate. The saving doesn't just disappear, it reverses, plus interest and potential shortfall penalties. There is a way out. If the company qualifies as a genuine personal services business, the PSI rule do not apply and normal tax rules stand. To qualify, the business must pass one of the 4 tests: the result test, unrelated client test, employment test, or a business premises test. Or you can apply to the commissioner for the formal determination. But here is where the consultant gets stuck. 95% of his company's income comes from that single client. This triggers the 80% rule. If 80% or more of your PSI comes from one client or their associates, you are automatically locked out of 3 of the 4 tests: the unrelated clients test, the employment test, and the business premises test. The only test available is the result test, which you can self-assess regardless of income concentration. The consultant gets paid by an hour, work under the client direction, and uses client system. He fails the result test. No PSB determination on file. No other test available. The PSI rules completely catches him. That means the full $180,000 is attributed back to him personally. The deductions the company claimed, home office, equipment, accounting fees, etc., are heavily restricted under the PSI rule. On top of that, the company now has PAYG withholding obligations it should have met all along. By the time the amended assessment, interest, and penalties are added, that $13,000 saving becomes a bill closer to $20,000. The structure can be fixed going forward, but the tax year's bill stays. This catches so many contractors because it's perfectly legal to invoice through the company, and the mistake is assuming that simply using a company automatically changes who the income belongs to and banking the tax savings before checking the rules. If you're finding this helpful, hit subscribe. I regularly break down the tax rules like this in plain, easy to understand English. So here is what doing it right looks like. Just 3 key check every time. 1. Honestly work out whether your income is PSI in the first place. Ask, what is the client really paying for? If more than half of the value of the contract is for your personal effort, skill, or expertise, rather than goods, assets, or business system, treat it as PSI from day one. Second, check where your income is coming from before you assume the test applies. If 80% or more comes from one client, 3 of the 4 PSB tests are off the table. If you believe you still qualify, get the formal personal services business determination from the commissioner rather than guessing it. 3. Keep strong documentation, records of how you source clients, how you are paid, and the equipment and premises you genuinely use support your position if ATO ever reviews you. Review it every year. PSB status isn't a set and forget decision. The ATO compliance focus target arrangements that redirects income to associated entities without real commercial substance. Even a technically valid PSB can still be challenged under Part 4A if tax avoidance was a dominant purpose. Get these 3 things right, and running your services through a company or a trust is completely legitimate and effective way to structure a genuine business. Get them wrong, and a small apparent saving can turn into a very expensive bill plus professional fees to fix it. If you are a contracting or consulting through your own company or trust, now is the time to get this properly checked before the next invoice goes out, not after the ATO reviews the return. That's exactly what a first conversation with our team at ClearTax looks like. We will give you an honest assessment on whether your income is PSI, whether your structure passes the PSB test, and whether the tax saving on your books is actually real and sustainable. Reach out to the ClearTax team through the link in the description and book your complimentary session before you start invoicing, not after the ATO comes knocking.